Let's talk about interest only, because a lot of investors do go with that option. Of course, when you're only paying the interest, it means that your cash flow position is going to look better. You have to fork out less money each week, meaning that it might be more affordable for the average investor, especially if you've got multiple properties. It might help you managing your money a little bit better. But one of the downsides of interest only is, firstly, you'll find that a lot of lenders actually reduce your borrowing capacity, which is a bit surprising because you'd think if you're paying less money each week, maybe they'll lend you more money. But from my experience, when I go for loans, if you go for a principal and interest option, you often actually get a stronger borrowing capacity, which means you can borrow more money to go towards your property. So that's something when you want to ask your mortgage broker whether you can get a better borrowing capacity by going principal and interest. The second thing is that interest only loans, they typically have a period. So it's anywhere usually from 1 to 5 years. At the end of that period, then it reverts to principal and interest. And at that point, you can either refinance the loan as interest only or just head over to those principal repayments. So that can therefore affect your cash flow as well. So really note when that period ends, because it can come as a little bit of a surprise, especially if you've got multiple properties. The other downside of interest only is sometimes the interest rate is a little bit higher. So recently when I refinanced, I found that the percentage was about 0.25% higher. So obviously forking out more money to have the benefit of interest only. But it's not a huge amount, but it's just something to be aware of.